Hey everybody, Daniel Klein here. Welcome to another edition of the Nightly Entrepreneur. It's great to have you here tonight. Joining with me, as always, is the wonderful Mark Dawson. Hey Mark, how's it going tonight?
Hey Daniel, how's it going? Tonight we're going to talk about finances, specifically business finances. Business finances. One of the most important things that we could possibly talk about. Money. Right, Daniel?
Yep, exactly right. So how you spend your money, where it goes, how you get your money in, where that goes, and how you keep the different groups of money in the right groups. So the
Unintelligible at this point, but I assure you folks, he wrote a very good post on juststudios.net about this very topic. And I read the post and I thought, let's do the finances episode tonight because I was inspired by the post and it brings up some very good points. The first of which is, let's talk about one of the most important parts even before you're during the fledgling operations of starting a business is, we definitely need to separate our accounts. Why, Daniel? Why do we have to separate our accounts?
So we separate our accounts for a couple of reasons. When you first start out, you're going to want to, at the very minimum, open up a new checking account, link that to a savings account for overdraft protection, and have your own credit card just for your business. Why? Like Mark asked. It's because when you have an LLC, S Corp, C Corp, there's a corporate veil that protects you personally from liability, financially and otherwise, should something go wrong with your business. And it complicates things if you pierce that veil often enough or at all. So for example, if you start charging personal expenses to your business, okay, whatever you think. But then something happens with your business or something happens to you personally and you get sued in one way or another. Either your business gets sued or you personally get sued. And they start tracking on your finances to find out, what's happening and where things are going. And they find out that, you keep moving money around between your business and you personally. Well, then you don't have that corporate veil that protects your business. Now they can start going after your business too. And it goes the opposite way. So if you have a lawn maintenance,
No.
your lawnmower flies off and kills somebody, but you've been charging personal expenses to your business credit card, well, then now they can start going after you potentially personally. And that's not a good thing. So you want to keep your money separate, just like you want to keep your assets separate. And you want to try and separate your business from you personally as much as possible so that should something bad happen, you don't have to worry about it dripping into your personal life. If your business has to foreclose or call out bankruptcy, it can do that without you personally having to call out that bankruptcy as well.
Yeah, and I think some people might be a little bit confused by the wording, like, oh, corporate veil, piercing, like what are these words, right? It's just keep your money in separate pots because it's safer that way. Okay, if you get in trouble, you get sued by a carpenter that's working on your house, right? And they can't necessarily come after your business, okay? If you got everything separated, all right? And just like Daniel said, if the other way around, something happens to your business, your business goes bankrupt, you don't necessarily personally suffer. Your business is toast, okay? Not you as a person. I'm gonna come take your house and your pool, right? There's a legalese side of it and that kind of thing, but really, folks, it just makes sense, okay? Because for your own organization, and I speak from experience, if you budget for your business and you say, well, I've got this capital investment, so I'm gonna devote $1,000 to my little startup, my little online startup, right? And then okay, I separated it from my personal accounts, and when that's gone, or as you're using it for business expenses, you can really keep track a lot easier. That way it's not mixed in with your transactions that you go to the 7-Eleven or your wife's buying groceries off the debit card and you're looking at your statements in the end of the month and you're like, well, I've got this, $330. Is that for my business or personal? And then, it's like, it's hard enough to organize your finances these days. So it can really help you with organization and keeping track of what you're spending, what money's coming in and where it's going, and just keeping everything nice and tight.
Yep, exactly.
You can use some great software out there for your own personal finances as well. QuickBooks is one that I'm very familiar with. If you've got a small business and you don't have a lot of transactions coming in and going out, it makes it a lot easier to keep track of what's going on, right? If you use, even most business checking accounts have comparable software to QuickBooks now, where you have some decent tools on just your checking account. So you don't even need to go buy, some expensive software. Just keep things simple. You can use it on your business checking account. One of the things that that isn't necessarily mentioned in the post that I do want to mention is, what does it take to get what do I have to do to get a business checking account? Well, you need two things, right? You need to be incorporated within your state. So you need to have an LLC in your state, sole proprietorship, right? And you need to have an EIN, right? Which is from federal. It's basically a social security number for your business, for the federal government, for tax purposes, right? Those two things, right, Daniel? I mean, that's pretty much all you need is those two things, the certificate from your state, and each state is a little bit different in how they do that, but usually a Secretary of State, at least here in Georgia, and your EIN from the federal government, which is not that difficult to get. I mean, you can do everything on the internet now, right? You don't have to wait in a long line.
On the internet drunk too, so be careful.
Yeah, be careful. You don't want to do it after you've had one too many. But and those things are the only thing that you need. And you can get a business checking account online as well. You can do it on your phone, right? You just have those two PDFs ready, or those two proving documents. You have all your stuff together. It's form fill. Like it's not that difficult to get a business checking account these days. So there's really no excuse. You don't even have to pay for it. You do have to pay to be a legitimate business in your state. I don't think you have to pay for an EIN, do you, Daniel? I don't think you have to pay for it at all.
No, I don't think so.
You just want to keep it forever so you don't ever have to go back to them to get it again. But and then you don't have to pay for a business checking account unless you want some extra products or some bells and whistles. So there's really no excuse to separate out your finances. And I want to talk a little bit about some pitfalls, and I know Daniel can chime in on this after I describe some. But you also need to make it easier for yourself. I run into this now. I solved the problem, okay, but even now, after having a handful of businesses, I still run into some nitpicky problems, right? How do I put money into my business account, right? Let's say things are going really well in my personal finances, and I want to scale up the business a little bit, give it a cash infusion, or if you have an investor, whatever. But just on a personal level, okay, I want to spend some money on the business. I want to do a marketing campaign, something like that. And how do I get personal funds into my business account, right? Well, one way, and now banking is done with banking is done on your phone, right? For the most part. And one way is just to write a paper check to your business, right? I mean, that's a really simple way to do it. You can do a transfer, a wire, stuff like that, but you just write a paper check to your business, log into your business checking on your phone. Most of them have where you're depositing a check, you're taking a picture of it and stuff like that, and then bam, you don't have to swipe your debit card out of convenience, your personal debit card out of convenience, because I need to do this now. This is like really hot item I need to take care of, but I might not have enough in my business checking account right now. I need to transfer that money over. It's so easy to take out your personal debit card and swipe it, or pay for this or pay for that out of convenience. You need to get rid of that. All business checking accounts, you can have a debit card. You can get a relatively low interest rate, and not a high amount necessarily, but low interest rate credit card for your business these days. Maybe even if it's just $500 or $1,000, make that your convenience for depositing money that you need for your business. Do you have any other pitfalls that, as far as combining those two together, you can
No, I
talk
like the
about?
ones you called out for sure. The only other one that I've run into kind of fits in with the whole hot item. I had to swipe my own card sort of thing. I would suggest that whatever card you get for your business, you get two of. So one you can keep in your office, just whatever cards you have, wrap a rubber band around and throw it in your desk, and then have one on your person so that, for example, if you have a business where you need to purchase gasoline for your vehicle, or you need other expenses while you're out and about, you have that corporate ability wherever you go. And I don't always have my wallet, like I don't have my wallet on me right now. But if I'm on the internet and I need to buy something for the business, then I can just turn around, reach in my desk and pull something out, and it's there as well. I've been in situations where I had no credit card in hand and I had to figure something out, and it sucks. So yeah, that's a great tip. Other pitfalls: some software is better than others at keeping track of your incoming and outgoing money. Um, some of the free yet really enterprise ready options, PayPal. I recommend PayPal for sure because it's kind of like a checking account already. It lets you set your customers up for success by offering financing options. They'll also let you take out a PayPal credit card for your business. And it's really handy at the end of the year. And I know we're going to talk about taxes here in a minute,
Yeah.
but it's really handy at the end of the year when it comes to taxes. And you have one form with one application. You've been using that one software the whole year and just print it out and like, this is my expenses. This is my profit. Here I go. It's gonna be a pain in the ass otherwise.
Yeah. One of the things that you mentioned, and we will get to taxes in a minute, but one of the things that you mentioned in your post was, kind of a hard and fast rule of having X amount in your account to cover expenses for, what'd you say, like a month or something like that, right?
Yep.
Is that what you said?
Yeah.
And for some people, right, I understand, Daniel understands, for some people, you might not even have that for your personal account, right? I mean, we're coming off a recession. We have to be realistic about this. We're coming off a recession, and some people took a hard lick, right? And they don't have the savings that they did 10 years ago. Okay, and that's just the reality of the way things are. And you have a dream, and you've got some money to start this business, and your overhead may be low, which is good. I always suggest that in the beginning, especially if you're starting something that's low capital. Then you may not have, what our post suggests, like a month worth of expenses in your own personal savings, and you may not, definitely don't have it in your business account, and that's okay. But the point is, though, is that it's something to strive for. Okay, you definitely want to get there, and you can get there. It just means that you're going to be smart about your purchases. Personal wise, you should always be smart about your purchases, and you should also, really be smart about your business purchases. Is what you're spending your money on in your small business going to make you more money? And how long is the turnaround? Like,
Yeah.
we have to think about that.
Yeah.
So
Now, if you can't have here's a suggestion. So if you, for whatever reason, can't have a month's worth of, I guess, whatever dollar amount all your bills are for the month, if you don't have that set aside in your business account to cover you in case something goes wrong or south quick, one other thing which you should do in either way, but definitely in this case, negotiate your contracts better. So in all circumstances, every single contract you sign, every single button you click that says accept terms and conditions, it's negotiable. It is very negotiable. All you have to do is pitch enough of a fit with the right person. It's negotiable. And one thing that I highly recommend, especially in this case, is negotiate so that you get your money as soon as possible. You get your money ASAP. And you don't pay money to the people you owe money to for 60 days plus. So you can pay them when you have the money. You get your money now. And you make sure that's up front. That is number one, first and foremost in your businesses. When someone owes you money, you get that money quick. And when you owe someone money, you have the flexibility to pay over 30 days. 30 days is pretty standard. I've seen 60 days be very standard too in other businesses. I haven't seen 90 days, but 60 is pretty legit. But you negotiate so that you pay when you have the money, and you get your money now, just so that you don't end up going in debt every single month, and then you collect your receivables and you break even plus a little profit. Don't put yourself in that situation. Have it go in reverse. Get your money first, and then you pay.
Yeah, I agree, and I feel like we could have a whole episode on cash flow alone. You know, this is we're trying to be a little bit more about the nice tips and practices for finance. Cash flow is like a serious issue, you know, and Daniel just provided a really good tip. If you can get away with it, get paid right up front for as much as possible on all your contracts, you know, or get a suite terms so that you're getting a known amount every month that you can count on over the course of a year. That's great too, you know, so that way you have a stability of income. And if you're going to finance something for someone, like, you know, it's hard for me because Daniel messed this whole thing up by talking about lawn care maintenance right away, and now I can't stop thinking about lawn care maintenance. I don't even want to think about
maintenance, man. That's the business.
If you can get enough contracts that are stable. For instance, I pay my guy, you know, $150 a month. He can count on it. It's due at a certain date, and if you can get some customers like that, they may not pay you up front, but you know on this date for X amount of time, hopefully a year or more, that you're going to get that stability of income, because you're going to have stability in overhead, right? I mean, you're going to have overhead that's like, no kidding, like this is due on this day. If you're, you know, if you got a van or something like that, and you're doing deliveries or you're doing lawn care maintenance, you know, you've got payments on the equipment. Those are due. That's a known date that's due. So if you can get others that are income that's known, and then you get some payment up front on some bigger jobs that are bonus, like that can be really good for your cash flow. The other aspect of this, as far as you know, separating your personal finances from the business, is taxes. Okay, at the end of the year, you really, whether you do your own taxes now for your person, or you've had a business before and you've done the taxes, like even if you pay someone to do your taxes, you're going to do your taxes. Okay,
Quarterly.
Yeah. You are going to have to, even if you pay a CPA, you're going to have to prepare that stuff to give to them, you know, and which means you have to be organized, and having your business account separate from your personal account is going to make you so much more organized, and it's going to save you money, because the more you can write off legitimately on your taxes through your business account, and the more also, you know, Daniel, I think you mentioned this in the post too, but there are a lot of things you can write off that you start paying with your personal, and you're already piercing that veil. All right, you've already broken the rule of keeping your stuff not together, and it's not just about liability. It's also about, can you legitimately write this off or not? Like, you paid for it with the same money that you're buying your groceries with. Unless you're running a restaurant, you know, you got to keep these things separate. It's going to save you a lot of money. Also, for your credit cards, if you have a business credit card, guess what you can do at the end of the year? You can write off the interest on that credit card. But if you're using the same credit card for, you know, your flat screen TV that has nothing to do with your business, unless you got a gym or something, but for your flat screen TV at home, right? And you're also swiping that credit card for the gas to fill up your work van for your business, you can't, then you gotta, it's such a pain to separate that out, that interest at the end of the year. You want to be able to write off as much as possible, because guess what? The more successful you are, unfortunately, it's capitalism. You know, the more taxes you're going to have to pay, and that's just the way it is. So the more you can get out of by claiming expenses, by having that documentation nice and neat, nice and separate, the better off and the more easy tax time is going to be for you.
Yeah. Also, prepare your taxes quarterly. So you owe estimates on a quarterly basis. Actually, do me a huge favor. Go into Google right now and type in whatever year it is when you're watching this video, and quarterly tax due dates, and add it to your Google Calendar to set a reminder a couple weeks before that date so that you submit your quarterly filings on time, because that is important. If you're drawing up now, not so important if you're not making profit, like if you're getting stood up and you have a lot of startup costs, or you're starting up and you have a lot of expenses and you're not making profit yet, you're not in the black, then it's less important. But don't get caught at the end of the year with a profit and you haven't filed quarterly and you have no money saved to pay your taxes. You will be owed.
So what happens then? I mean,
You still owe the money.
Yeah. So you didn't file quarterly, which
Yeah.
means you weren't keeping up. Like, okay, so
Yep.
quarter one, you owe a couple $100, because you made a decent profit. Quarter two, you don't owe anything. Quarter three, you owe $500. Quarter four, you owe, was gangbusters, and you owe $1,200 in taxes, right? So what happens then, Daniel? I mean, you didn't file quarterly. You didn't send off those 4 checks during the year or whatever. What happens to you when you file your taxes?
So let me be 100% clear with this. 100% clear, trolls.
100%.
I am not a lawyer.
No.
I am not an accountant.
No.
I am not a CPA. Do not take my advice. Go seek qualified help now.
Yes.
I am an internet guy. You met me on the freaking internet. Don't trust what I say. That said, you owe the IRS on a quarterly basis, not on a yearly basis. If you work for an employer, that employer files your quarterly on your behalf, and at the end of the year, you recoup. So you will pay a penalty if you don't pay your quarterly taxes, and at the end of the year, you owe them money.
If you don't owe them money, then
if you don't owe them money, then it's not a problem. But if you owe them money and you haven't been paying over the course of the year, like if you're running profit and you haven't been paying quarterlies, you will also owe a fee.
How much of a fee are we talking?
I don't know. I've never run into that problem. I'm just a guy on the internet.
Well, it's important to keep track, and quarterly is important. Okay, if you want to run a profit, right? Everybody, if you're listening to this show, I mean, you obviously want to run a profit. Otherwise, you wouldn't be listening to this show, right?
Freaking communist. Why are you listening to this show if you don't want to make a profit?
Yeah,
You're just trying to troll us in the comments.
Hi trolls, you to make a profit. So if you're going to make a profit, which you should be throughout the year, you definitely want to save yourself some heartache, save yourself some organizational time. You're going to still do your own taxes, right? Everybody does taxes every year. You're going to do your own personal taxes, or you're going to prepare them for someone else to do them. And now you have to do something else's taxes. And if you have more than one business, you're going to do those taxes and those, So you really got to keep things nice and tidy. Nice and tidy for the end of the year. You want to make sure you're getting the most deductions possible. Be smart about your business expenses. Just because you have money in one or the other doesn't mean, that you can pierce that veil and start combining pots. Okay, Daniel, let's talk about something positive. Okay, what do you do when you made a profit? You send off your taxes, right? All your expenses are paid. You're looking good.
Yeah.
And you want to pay yourself, even if it's just like 100 bones or like, something just to wet your whistle a little bit to say, look, I made money on the business. I'm going to go ahead and pay myself. How do you do it?
So I think you're going to be in two boats at this point. You could have a 9-to-5 already, or still, and your 9-to-5 is paying most of your bills. And so you might be contemplating, well, do I pay myself, or do I just invest all the rest of it? Do I just, start building a pot of gold? Do I start stockpiling this cash for something big? Legally, in this case, again, I am not a lawyer. Do not take my advice. I am a guy you met on the internet. That said, legally, you need to pay yourself. And I think it's something, so the verbiage is like you need to pay yourself a fair wage or whatever else. I mean, you can't. So my understanding is you have to pay yourself, and then you have to claim that as income on your income taxes. So yeah, that's my understanding. That's a guy you met on the internet's understanding, people. Now, the other circumstances, you've quit your 9-to-5. This is your gig, and you need the money. In that case, yeah, same applies. You pay yourself the money, whatever fair wage is, or all of it. And yeah, you have to claim that as income, and you have to claim that on your personal taxes.
Okay, and How?
It's so that you know at the end of the year that there was an expense for salary. And so your business can write it off as an expense, but personally, again, guy you met on the internet, go get a CPA. There are plenty of CPAs out there. They're all
Well,
very helpful. Go get a CPA.
sure. Okay, and that's sound legal advice and sound financial advice to have a CPA. I never use one. I probably will next year. I say that every year, but then I like roll up my sleeves and I'm like, I got this tax thing.
And you
Let's
put
do
on
it.
the green hat and you're like,
Yeah, I'm like doing the. I got that armband, and I'm just like, you know, I'll finish this when I'm done. You know, that kind of thing. And
yeah, dark lit room, half burned cigarette in your mouth.
yeah, you're basically doing another household's taxes. You know,
Pretty
but it's your business, and you can curse yourself. You know, you can say, back in February, I lost my mind, and I screwed my future self over because I made this ridiculous, you know, knot of, I don't even know, like, how do I untangle this thing and how do I figure this out? You can do that to yourself.
What do you mean not?
I was out and about. We had this trade show. I left my card in the hotel room. I had to make this purchase. I had to make all these purchases. And then, like, you know, in the second quarter, I had some of my business stuff come out of my personal account on accident just because
Okay, so you've screwed yourself over a couple times.
and you're like, and you're trying to untie the knot, and you've got like interest from a credit card that you got to try to calculate and try to figure out. Like, you're going to make mistakes, and at the end of the year, you're going to be the one that's responsible, and you're going to have to fix them. So just something to keep in mind. You want to be as organized as possible.
Yep.
Yeah, hire a CPA. If you can afford to hire a CPA, hire a CPA. They'll steer you in the right direction in all things and probably get you.
Expense.
It's an
Hiring
expense.
a CPA is an expense.
And this is just a guy on the internet that has had many businesses and will have many more, and has several now. But in my opinion, I have to do just as much work to provide the CPA with all those records, that I might as well just lock myself in a room, you know, in early April, late March, as far as closing out the year. So, you know, we're not gonna go too far into the whole tax thing, just because we aren't experts, and we don't want to give, you know, some legal advice that wasn't sound. Everybody in different business types operates their business differently too. It uses different cash flow models and stuff.
Let's be very clear. We are not legal experts, and we are not giving you any legal advice whatsoever.
No. Okay. What if you got partners, Daniel? Because, you know, in the taxi business, we had this situation where, hey, we're ready to release some money, and you've got to divvy it out, right? You got to decide how much it's going to be, and then what percentage goes where, right? If you got an investor, they're going to want those checks.
Yeah.
When you put money in to your business, it's called a capital contribution. Okay, so you're putting money and you're investing in your business. Capital contribution. What's it called when you're taking money out, Daniel?
So just real quick, when you put money into your business or you loan your business money, you cannot also charge interest.
No. Yeah, no.
So don't do that. Don't be stupid when it comes to money. Don't try and trick yourself. That's stupid. Trick your own business because you own your business. Don't be dumb like that, because it will catch up to you, and it's self-defeating. Don't charge yourself interest. That's dumb.
So when you take money out, it can be a salary.
It can be a salary. It can be an expense.
Or it could be profit, right? Profit sharing.
Hopefully.
It's not. Hopefully.
Hopefully.
Yeah, it is. Either way, you got to claim it on your taxes, on your personal taxes.
Yeah.
So,
yeah.
You know, but look, all this stuff can be, you know, all the in-depth stuff can be talked about with a professional, a CPA, with a lawyer, which we are not. Really, we just wanted to give some good tips, some good sound daily advice, like routine kind of advice, like Daniel mentioned, keeping the 2 cards, and just so that it's all nice and neat, all nice and separate, and you don't make yourself liable in the future. So hopefully you got something out of this. Stay tuned for next time. Thank you very much.
Bye, guys.
Say bye, Daniel. Say
bye, Daniel.
Bye, Daniel. Good night.